Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at howtotrade.com, and together we're going to explain everything you need to know about trading the bullish divergence pattern. So let's get started.
Bullish divergence is one of my favorite technical setups, and it's a vital technical indicator. It's showing us the disconnect between the momentum in price action against the technical structure of an oscillating indicator. Many traders will use this as a vital part of their trading strategy. It's often called a disagreement between price and the indicator. MACD and RSI are both very popular indicators to use with this type of a setup, and it's one of the few leading edges that we actually have between price action and indicators, which is one of the reasons why it's so popular. It's very common in all markets and on all time frames. So let's have a quick look at exactly how we'd go about identifying it. Price convergence and divergence against momentum indicators is a great addition to anybody's toolbox, and very, very simple to use on any time frame, on any asset class. What we're looking for is a sequence of lower lows to establish our downtrend. But the momentum indicator, this is it here at the bottom here. It could be MACD, it could be RSI, stochastics. There's lots of different ones to choose from. What you're looking for is the indicator to follow the same sort of sequence of patterns. So we've got a low, and then the indicator follows and makes it a new low, and the same again there, and a new low there. At some point, that relationship will start to change, and the momentum indicator will show us that the down move is starting to run out of momentum, despite the fact that it's printing continual new lows. And you can see it here. So we make a new low in price here, but we don't make a new low in the momentum indicator. And it's the same again here. That is the leading edge, and you quite often get a good reaction to the upside with that type of structure. So what we have got is a convergence here between price and the momentum indicator as they both narrow in on each other. Now, there's various different ways you can get long this market from here, and I would use something structural within the support and resistance itself, but make sure you always adequately place a stop loss, and obviously always use good risk to reward ratios in all of your trading. But that is the basic principle of how we would go about identifying it.
Okay, let's have a look at an example of bullish divergence. So for this example, we're going to use the relative strength index. You can also use examples with the MACD and the stochastics oscillator as well. We're going to use the RSI indicator now. So the RSI is a momentum indicator used to identify overbought and oversold readings in the market. And when that RSI up at the top here shows 70, that's an indication to us that the market is in overbought conditions and that prices are expected to reverse. On the other hand, when we're in this around this 30 level, that indicates to us that we're looking for oversold territory and a reversal to the upside. Now on this chart now, when we look at bullish divergence, what you can see is even though this market has moved from here all the way down to the lows around here, and it's a clear downtrend as you can see by this arrow, at the very same time we can see the RSI indicator actually create a new higher low. So even though the market's created a lower low, the RSI indicator's created a higher low, and that indicates to us that we're going to get a reversal in the market. Now you can see when we've got this move from this RSI from around 32 up towards the 35 level, and the market's moved significantly down, we need to wait again for that breakout above a key high. And you can see as soon as we got that breakout above here, then potentially traders would have entered a buy position at around here with a stop loss probably just sitting below the most recent low. And as you can see from there, you can actually gain a very nice just over one-to-one trade just by trading that reversal pattern by using bullish divergence with the RSI indicator.
Okay, here are a few of the pros and cons for the bullish divergence pattern. On the pros side of the ledger, it's a very reliable indicator. Many traders view bullish divergence as being an important part of their trading plan. Also, the bullish divergence pattern offers a lot of trading opportunities, particularly for short-term traders. It's a commonly occurring pattern and may be applied to many markets on many time frames. Now, on the cons side, It's not necessarily an easy pattern to recognize and identify on trading charts. There is a bit of nuance in work involved in interpreting the bullish divergence pattern. Also, it's not a particularly strong indicator. Instead, it is used as another confirmation to enter or exit a position. So, although it may be reliable, it's not necessarily the best standalone indicator. And lastly, it's not ideal for beginner traders. Bullish divergence pattern is a sophisticated chart pattern, and it's definitely designed for an experienced Forex futures or shares trader. Now, let's review some of the key takeaways from the bullish divergence pattern. Number one, bullish divergence occurs when the price of an asset creates new lows while a momentum oscillator is moving in the opposite direction. Number two, bullish divergence signals that pricing momentum is weakening and a reversal is possible. Number three, complementary indicators include the MACD, RSI, and stochastic oscillator. And number four, traders view the bullish divergence pattern as a lagging indicator as the technical analysis tools precede the asset's price action. Now, if you want to learn more about the bullish divergence pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit the bullish divergence pattern into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain market experience. Once you're ready, feel free to join our How to Trade Funded Trader program.